Man, that was a wild summer of trading, right? Well, the ride's probably not over as we come into September of 2022. Because I want to bring your attention to a forecast, all right? That's a meeting of time and price coming in on the S&P that you can use to trade the week and even the month ahead. So let's take a close look here. And before we look at the charts, important reminder that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in this video. So here we have a chart of the E-mini S&P 500 futures. And if you're new here, I'm Hema Reddy, and I trade futures, stocks, and options using the trifecta method of price, time, and momentum. And I also share resources and education with my tribe to help them do this as well. Now, what I want you to see here is that there are a few key points on this chart that actually set us up for not only a price analysis, but also a time analysis. Because guys, this entire bottom axis of your chart, if you're not using it, you're leaving money on the table. So every candlestick here, every one of these red and green bars is representing 1 day of price action. And this is on my favorite futures market, the E-mini S&P 500. So this is a way to trade the bigger market moves, but not have to spend the big market money. Now, if you have an even smaller trading account to start, you can use the micro ES. So that would be symbol MES. And this is currently the September 2022 contract, so U22. All right. So there are some key markings on this chart here. And let me give you a quick overview before we focus in on the forecast. Number one, the black marks here are for recent interest rate hikes that were done by the Fed here in the States. And this has been very important time for interest rates because finally, after really low interest rates for a really long time, they're starting to come up again. This affects our entire financial system and economy and definitely affects company performance, earnings, and more. So this is important for stocks, futures, options trading, and pretty much any asset class. Now, the most recent rate hike was on July 27th of 75 basis points. And the next meeting is this blue vertical line, September 21st. So if that's not marked on your calendar, it better be, because that's just going to be another day that the Fed might make a move that, whether expected or not, could impact the markets. Now, this forecast business I'm talking about, well, this is really cool. I love forecasting because the way I do it and the way I teach it in a loss forecasting trading system, it takes just minutes, sometimes seconds, once you're used to it. And it's simple and based on indicators and tools you already have in every popular trading platform. Okay, I happen to be on TradeStation, but whether you use Thinkorswim or NinjaTrader or anything else, you can forecast because the tools that are in those platforms by default are what you're going to use to forecast. What you need to learn is how you make forecasts and how you trade forecasts when they're hit on the nose or when they're missed, and I teach both. So what is a forecast? It's a meeting of price and time. It's like an X marks the spot on your chart. Now, here's a really cool thing. As early as August 17th, so right after this peak we had in mid-August, you could have calculated the forecast you see here for price to trade down into September 2nd. And the forecast was for price to come all the way down to 3764.75. So again, I teach the methods of how to create such precise forecasts in my loss forecasting trading system, but here I'm giving you the resulting forecast. Now, what I want to focus on here is the more recent action. So I'm going to zoom in and make our candles bigger and look at how the market had behaved. Now notice on September 1st, it made a low. And there's a special type of candlestick that I get into in the Gann candlesticks trading system, but it's called a hammer. And the way I trade hammers gives us even more ways to profit off of them. But after that hammer formed, it was 1 day earlier than the forecast date. Would you like to be able to know when a low that's potentially significant in a market is going to form just with a 1 day margin? Pretty awesome, right? Now, what about this bit about missing the price target? You know, the forecast was for the market to trade all the way down into this price and time, right? The forecast has both. Well, this is the cool thing. By trading and not coming all the way down into the forecast because we were projecting for a low to form in the market, this tells me that this market is probably stronger than the forecast I calculated in the related cycles. And I get into the details of that so that you can apply it in any market direction in the loss forecasting trading system. But guys, I'm giving you here a nugget you can use and be prepared for the trading week ahead. And again, like I said, the month even, because we have the FOMC meeting out on September 21st. All right, now that I have this forecast and I can see where it hit really close, right? Formed low one day early, but also where it missed, making a price low much higher than the expected level. Here's how you navigate it, all right? So those of you who have lost forecasting, this will definitely fit within the framework of everything you know. And those of you who don't have loss forecasting yet, you can still use this to navigate these trades before you invest in your education to learn how to make forecasts for yourself. So I'm going to give you a couple bits here, and the rest I'm going to get into in the specifics of my Skinny in the Mini. That's my ES Futures report I put out multiple times a week. Next one coming out tomorrow. All right, so the first bit here is to find the nearby price floors and ceilings so that you can be prepared to act on a confirmation that this forecast is actually going to stick and hold fully and give us a tradable low. So the first area of price ceiling or resistance that I see is 4072.75 because this is a lower price high off of the August 16th high. Now, when I say a price high, it's price with a capital P, and that's in a lot of the education I have in the beginning of my courses and books. Now, from a support point of view, from a price floor point of view, we have the low of that hammer candle itself. So I'm going to put a pink line on it because I use colors to help me quickly recognize the types of levels I'm drawing. And then beyond that, I will also look at this low right here, 382.25. Now you might look and say, "Oh, Hema, that's quite a window there." Yes, but with how the market has fallen over the past several weeks, wouldn't it be still useful to know if a tradable low might hold within this window? Right? So it's not about coming to some exact level and turning like, a ballerina on a pointed shoe, okay? It's not always going to be that precise. But if you can get in the ballpark and you know what to look for, then you can make even a forecast that's not perfectly hit on the nose be very useful. On the upside, I'm going to add in another level as well, and that is the Friday, September 2nd high. All right, so I've mapped out 2 resistance, 2 supports. I'll have many more in the full skinny that I write for Tuesday, September 6th. Here's the deal, guys, all right? I'm finally going to now talk about momentum for a second, my RSI Power Zones indicator in the bottom here. I want you to notice that the RSI Power Zones are displaying an advanced concept here. I teach this in advanced RSI Power Zones, where they have revisited past significant activity. So that relationship that I'm seeing here is also feeding into the likelihood for this market to form a tradable low soon. And maybe we see this support at 3903.5 get tested and trade a little bit below. That's okay. You got to be patient here, all right? Now, even if a tradable low forms within the vicinity of 3903.5 and not too far from September 2nd, now you can see on the upside, in order for us to have any substantial move higher, we have to clear 4019.25 and then 4072.75. Those are the most immediate nearby key resistance levels. So there you have it, a forecast laid out for you that you could have been creating on your own and monitoring since weeks ago if you were deploying the loss forecasting methods. I'm giving you the resulting forecast and some of the levels to monitor around it to be able to trade it. Okay, so we're looking for a tradable low to form in the 3903.5 area if it hasn't already with the September 1st low, giving a little bit of a buffer down to 3820.25. And if that occurs, then we want to see price turn around and climb through these levels. And what that would tell me, guys, is that the market is ready for another recovery move higher. And then you could draw a new forecast. Okay, they are drawn and redrawn and connecting to each other as new market cycles unfold and are created. So it's going to be an interesting fall season in the markets, no matter what the Fed says on September 21st, and no matter what comes of this specific cycle. But hey, this is a really close look at how you can lose loss forecasting. And again, you can use this with any trading software because all I did was take calculations of price levels and use existing tools in my platform that are on any platform to come up with that forecast that can help you squeeze more profits out of the markets. And for those of you who have experienced a little bit of the rough time of this recent distribution, Forecasts can also help you save money and protect profits and reduce losses. And I get into all of that in the loss forecasting system. So remember to subscribe, like, comment down below, share any nuggets that you learned from this video and what more you'd like to learn, and I'll catch you on the inside. You can sign up with the link to join my tribe and get my hot, timely, actionable updates as soon as I publish right to your inbox.